Good afternoon to our viewers here in Nigeria and around the world. A very special edition of the show, Business Incorporated, this Tuesday, and we're reaching you live from our global headquarters in Lagos. I am Bosin Amofaye. On the show today, the World Bank warns global growth could fall short of 2.6% forecast made in June. And Hong Kong's stock exchange drops $39 billion bid for the priced London Stock Exchange. And Nigerian President Muhammadu Buhari presents Budget 2020 proposals to a joint session of the National Assembly today. Now let's get the show started. The World Bank warned that global growth could fall short of the 2.6% which was predicted in June. In a speech in Montreal ahead of the World Bank and IMF's annual meetings next week, the president of the World Bank, David Malpass, says global growth is slowing and expects a lower forecast due to Brexit, Europe's recession, and trade uncertainty. Malpass advises countries to have well-designed structural reforms, including beefing up the rule of law so that private companies can compete with state-owned enterprises. Meantime, in the UK, the markets are still reacting to the news that Hong Kong Stock Exchange has dropped its bid for the London Stock Exchange, nearly $40 billion. Early today, Bloomberg reported that Hong Kong shareholders says it's not in their best interest to take over the London Stock Exchange. Let's talk to my colleague from our London studios, Juliana Olayinka. She's live to us at this time. Juliana, welcome to the program. The Hong Kong London Stock Exchange story is the big one, but first, there is the Pizza Express $1.1 billion debt restructuring. How is this company trying to restructure this debt, and what is the way forward for this pizza company? I think we have a little audio, Apache audio there from Juliana. Of course, the big story around the Pizza Express is a 1.1 billion British pounds debt that this company is trying to restructure. And that's one big story everyone is looking at. But again, the Hong Kong and the London Stock Exchange story is a big one that the London stock market, the London Stock Exchange share price took a bit of a hit early this morning on that news. Hong Kong is backing down. The shareholder says it's not in the best interest of this Hong Kong Stock Exchange to do the bidding. London Stock Exchange, of course, reacted 2 weeks ago and says it's not ready to meet with the officials of the Hong Kong Stock Exchange for this bid, which he says was controversial and not invited. It's another name for a hostile takeover bid by the Hong Kong Stock Exchange. But today, the market is moving on. One big story that we're also following for everyone is Nigeria's president, who is expected to deliver Budget 2020 as planned to the National Assembly at 2 o'clock. That's in a few minutes from now. President Buhari is expected to present about 11 trillion, 10.729 trillion naira in headline figure to the joint session of the upper and lower house. All of that will be taken live for you within the course of the hour. But let's get back to Juliana Olayinka, my colleague from our London studio. I'm sure we got the technical audio sorted out. Pizza Express, Juliana, that's where we're starting this conversation from. I want you to flesh up, put some dough, put some little spices on this 1.1 billion debt for us.
Sorry about that, Bosun. I'm not sure where you lost me, but I'll start at the beginning. And as I said, Pizza Express, they're in £1.1 billion worth of debt. It's a lot of money. They've got over 470 chains in the UK. And analysts are saying that each chain owns about £1 million. It's a really popular high street chain. It's been going now for over 54 years, and it was just recently voted the most popular brand in the UK. But they're in trouble. They're not the only restaurant that have been in trouble recently. A lot of casual diners, so those that would take their families out for dinner after work, they're just not doing that anymore. And it is becoming particularly competitive if you've got the likes of Just Eat and all of these online takeaway delivery apps, so people can eat from home. Now, they're due to speak to their creditors, and if they don't pay, I think it's about half a billion pounds, £500 million by August 2021, then they could collapse. A lot of people close to them are saying, don't panic, there's still time. But it just goes to show that even with the most popular food chains in the UK, it's a pretty competitive market at the moment.
Yes, I'm sure we'll still have time to share that lunch pizza together. So Pizza Express shouldn't go down yet. I'm not yet to have that lunch on you in London. So just keep them there, whatever happens. Maybe our lunch will take a bit out of their debt. But again, the big story, which is much bigger than Pizza Express, is the uninvited London Stock Exchange takeover by Hong Kong. This is big money, 32 billion pounds, but London turning its back on this uninvited takeover bid. How is the market today reacting to that, in particular the shares of the London Stock Exchange Group?
Well, it's interesting because that early trading, shares were down in the London Stock Exchange by just about a percentage point. And nobody ever thought that that would be the case, because some did say that it was dead in the water, that there was no way politically, not economically speaking, that London could merge with Hong Kong, because you would have the looming figure of China in the background. But, you know, the bid did fall through, £36 billion, which is a lot of money. Some say that the LSE were a little bit too pompous and could have given more of an ear to Hong Kong. But, you know, the equities in the currencies market isn't great at the moment. And that's for one reason, and that's Brexit. Bosun. Of course, there was that phone conversation this morning between Angela Merkel, the German Chancellor, and Boris Johnson, the British Prime Minister, and some say it was heated. Basically, the deal is dead in the water, and the market is in frenzy at the moment. Let's have a look at those numbers specifically. At intraday, the FTSE All-Share is up 0.24%, but the FTSE 100 is down 0.18%, and the FTSE 250 is also down 0.79%. The dollar is wiping the floor on the sterling. In currency, the British pound is down on the US dollar by 0.61%, also down on the euro by 0.76%, and down on the Japanese yen by 0.84%. Messy Brexit continues.
Messy Brexit continues. But again, Juliana, if we look at this, you said this was a political issue and not an economic story. Do you think the London Stock Exchange decided to say no to this deal, considering the fact that the UK is going through a rough patch right now, and that's not a good time to come in and steal one of my prized assets, which is the London Stock Exchange?
Absolutely, Bosun. And of course, as well, we can't take away what's going on in Hong Kong. Those protests at the moment are really severe, and the demonstrators have literally shut down the high street. The transport system is a mess. Tourists are flocking away from Hong Kong. So even though Hong Kong have come with a really juicy offer, the fact that they're in trouble with their constituents, the fact that they've got China looming over their corner, and as you said, you know, we are in a messy Brexit, and London really are holding on to the stock exchange. It was a deal, but a deal that some said is too good to be true.
Interesting. Okay, let's leave it there for today. Juliana Olayinka, my colleague from our London studios, thank you so much for coming through, and see you again tomorrow morning on Business Morning. See you then.